Hope everyone is doing well. It's been a while since we've had an FXStreet session, so we thought we would have another one. Great. Okay. So today's topic is very important. Now, before we get started, if anyone wants to take any of this deeper, any of the concepts, the rules around the original supply-demand strategy, any of that, you can always attend one of these complimentary workshops. There's the link in the chat to make it very easy for you. Those are complimentary. So anyone that's in an FXStreet session would certainly do better in the advanced workshop, which is what you see on the screen here. So there's the link in the chat. And from that, let's move on. So we're going to focus on the two most important parts of the real supply-demand strategy. I say real because I get feedback all the time from people that reach out that, there's so many versions of supply and demand out there these days. In the beginning, it was just the original supply-demand strategy and rules. A lot of people come along, many that have never even traded the strategy that add rules and change this and change that. And so this session will bring things back to real, and we'll go over that here. And let's dive in. So we're going to look at the live markets as well in just a bit. And if you have any questions in the chat, just put them in the chat, and I'll do my best to take care of them. All right. So when it comes to all the details of trading, right? Entry, stop, target, position type, position size, which market to trade, all that stuff. The two most important questions that come before almost any trading decision is, where is price most likely to turn, and where is price most likely to move to, right? So for that, we go to the original supply-demand strategy here. And there's two components to this that we just have this razor-sharp focus on that helps us determine where market prices are likely to turn and where they're likely to move to. But first, let's spend a minute making sure everybody's on the same page. Supply, demand, and fair value. The governing dynamics of supply and demand. How and why do prices move in markets? So what a lot of people don't focus on enough is fair value, the concept of fair value. We all operate, buy and sell in markets all the time, even what you're looking at on the screen here, and you may not even be aware of it, right? When we go to the market to buy food or to buy, a tool or an appliance or a car or a home, anything, clothing, whatever. Usually we're paying somewhere in the range of fair value to retail prices as the consumer, right? Now, if you're the store selling any of these items to people, you're probably selling at retail prices or supply, and you probably bought the item close to demand or wholesale prices. So even though we're talking about the trading markets here, this applies to everything. Fair value is the price level, price range where the majority of buyers and sellers agree to buy and sell. So it has this natural governing dynamic, natural effect of pulling price right back to it. And I'll explain that more in a moment. Sometimes prices move higher for some reason. Maybe there's a shortage, maybe, something like that. And prices briefly move out of fair value and higher. Okay. But eventually, in any market, they reach a price level where supply exceeds demand. Competition to sell its supply pushes price lower. It eliminates itself and pushes price back to the middle. Sometimes prices fall in a market. The US dollar is a good example of that. But eventually, after falling out of fair value, it reaches a level where demand exceeds supply. At that area, competition to buy at demand, right, eliminates itself and pushes price back to the middle. Now, fair value is, shifting from time to time, right? And but it's all about, but even when it shifts, that's just because maybe all of the supply at an area has been filled, and price then moves to the next supply zone with a new demand zone here, and this whole equation, right? This whole supply, demand, fair value just shifts higher, shifts lower. It's how every market works. So if you understand all that, and this is just basic economics 101, then the next question for us is, what does this picture look like on a price chart? When I was on the trading floor many years ago, this is what I spent my time doing outside of my what I had to do at the trading desk, facilitating order flow. I also spend time mapping this out. What does this look like on a price chart? So first, let's start with fair value. Fair value has two characteristics that we recognize, okay, that we look for. And it's the first thing we do in a market is identify fair value. So characteristic number one, notice the majority of trading activity is right here in this range. In a range, you'll see that at least 80% of the trading activity, trading volume is right here, fair value. Number two, notice the wide and whippy trading action here. Notice the wide and whippy price action. Someone tell me this, and this will help you understand. Why does price have such an easy time moving up and down through this area, through fair value here? Why does price have such an easy time moving up and down so many times in this price range here? Anybody have the answer? And I'll give you a hint. Something is missing. Right. What's missing is a significant supply and demand imbalance. Okay, that's what's missing. But if you look inside here, and this is very important, notice we have rally, base, rally. So a lot of people look at that and say, wow, that looks like a perfect looking demand zone. Structure-wise, it looks good. Doesn't work. Rally, base, rally. Doesn't work. Another rally, base, rally. Doesn't work. Drop, base, drop. Doesn't work. Rally, base, rally. Doesn't work. Right? So you have the picture that your average person looks for and says, wow, those must be great supply demand zones, but they don't work. Well, these would never qualify for us because they're inside fair value. Does that make sense? Now we're going to get to rules in a few minutes, but it's very important to understand that this concept of fair value, which is present in any market out there, and how we deal with it when we're buying and selling in the market. So if you've ever wondered why some supply demand zones that look like areas that look like supply demand zones, why some of those work and some of those don't, it's probably because you're not focused on where they're located. So based on that, okay. Raul, I see your question there. I think what you're getting at is, well, how do we identify that area, the top and bottom of that area, right? Is that kind of what you're getting at? Okay, I'm getting to that next. So once we identify fair value, we then look above that for our qualified supply zone, and below that for our qualified demand zone. And it's these fresh, outside the range supply demand zones that cause this to happen. All right? Yeah, and we're going to get to the charts, and I'm going to show you all that in just a few minutes. So it's all about, so how do we map this all out? Again, sticking with the original supply demand strategy rules, which have never changed. We focus on our structure and location analysis. There are 4 components that have to be present when it comes to structure. And then once we have that, where is it located? Is the supply or demand zone located inside fair value or outside fair value? Make sense? Okay. And these are the 2 most important components to understand, to be able to identify in any market that helps us determine where is price most likely to turn, where is price most likely to move to. All right? And just so we're all clear, all we're talking about here, in fact, all I ever talk about is the same, supply and demand lesson we all had in probably middle school, high school, university, if you went to university. It's supply, demand, fair value doesn't change. Okay. Just sharing with you what it looks like on a price chart if we map it out. So let's look at this. Interest rates, same thing. Same thing. A lot of the bond markets have come down to those larger time frame demand zones, which identify, that's the lower part of the range. We can look at that in a bit. So let's look at this. And I want to take you back. So the screenshots that you see on the left side here, these are all screenshots of live trading and analysis sessions. And any of you that, if you come to those workshops, you'll be able to get access to these, to join these for a week. And, but anyway, take a look here. So back here, we had a qualified demand zone. And on this day, this morning, price was up into our qualified outside the range supply zone. Very important. Notice price just went from the 432 demand to the 442.50 supply. This is like 2 weeks ago in our session. What we expect to happen when we have this scenario is the range or fair value is likely to be inside here until the buy orders down here are filled and or the sell orders up here are filled. Does that make sense to everyone? Ro, does that get that? Okay. Yeah, more. It's the middle. It's nothing new. I guess we've called it the novice space, right? You've probably heard me call it the novice space. It's fair value. I've just called it. I've called it the novice space in the past because I want to be crystal clear that we don't want to be buying and selling in the middle. Does that make sense? Okay. So same thing. All right. Yeah. So yeah, you need to stay out of the middle. So what happens next? What's happened over the past 2-3 weeks? 2 weeks, probably a week and a half, 2 weeks. This price then comes down to the 432, back up to the 432.50, back down, now back up again, and now we just prices just this morning reaching the next set of or getting close to some of the outside the range supply zones. All right. Yeah, I try to always, I don't know, think of different ways to explain all this, but it's, that it's supply, demand, fair value, the middle, the novice space, the supply demand curve, maybe, just identifying those areas out there, wholesale, retail, it's all the same thing. Yeah. Now, that's not to say that supply demand zones in the middle don't work. They do sometimes. You just have to understand that the probability is going to be lower because, exactly, Reggie, because there's a smaller supply-demand imbalance in here. In other words, if you look at this little rally-based rally right here, well, when price rallied out of that area, okay, when price rallied out of that area, demand definitely exceeded supply there. No question about it. There's no other reason why price would rally here, right? But that doesn't mean the imbalance is big enough to hold price when it comes back, right? Certainly not over here once all this has been established, right? When price fell out of this, supply definitely exceeded demand here. There's no other reason why price would fall. But that doesn't mean that there's enough of a supply-demand imbalance here to cause price to turn lower here. When the stuff is in the middle, the probability is lower. Let me, and I see another kind of question in the chat there. So yeah, so let me take you to, well, for example, let's go back over here. Um, actually, you know what? Let's just go to the live chart. It's going to be definitely easier. So here is, let's go over here. Let's go to either the SPY or the S&P futures. So now, 2 weeks later, there's that 432. And remember, we had I just showed you the 440, this 444.50. We had that, okay? That's this right here, which I'll show you. It's not here anymore because we've now rallied through it. We had the first pullback here, another pullback here. But notice once we came up to that area, I'll just put it in here. I'll put it back. Okay, it's really like right there. Okay, so we came up to, well, let's just go back and make sure we're crystal clear on it. Okay, right, it was, oh, it's the 442.50. So it goes all the way like up into here. So there we go. So we came into it here. Let me just double check. Yeah, 442.50. Okay. So we come into it here, right? This is the screenshot I just showed you. Then we come down to the 432.50, back up to here again, fall again, and now we're shifting a little bit higher. But let's talk about this area right here, which is, we also had this in our sessions. Where is it? Maybe it's better in the S&P. This thing right, you'll see it in a second. There it is, right here. Okay. So this is a tested zone. We've been back here before, right? So we've been back there twice. Anyway, my point is, here's the S&P futures, right? The SPY S&P futures, it's the same S&P. There's the 432. Here's that, 442.50. My point is, this was an inside the range demand zone. So this was actually sitting like right in here. Okay, this is the SPY, but if we were to put it in, it's like right in that area, right? But why did we take, an inside the range demand zone, and why did it work? So again, the point is, it's not that these don't work, but once let me go back over here to the SPY. Hopefully I'm not confusing anyone. I'm actually doing this to be as clear as possible. Okay, so once we went up here and then again up here and filled enough of this supply, right? Filled enough of the sell orders here, that's when these inside the range demand areas, which is this one right here, this one, that's when this became higher probability. In other words, you didn't need a big supply demand imbalance here for price to turn and move up through this, because these rallies here filled, most of the sell orders that were sitting in that 442.50 area. Does that make sense? I know I just bounced around a lot, but I don't want anyone thinking that this is just a high probability zone in and of itself. It is not. The majority of the time, this zone will not work. Okay, because there's not a big enough imbalance here. Okay. And, look at how deep price went into the zone. So it's not like there's a huge imbalance there. All right. And we actually never came back to the 432.50 yet, so that one is just sitting there. Now, if we go over to, let's go over to the Qs. This is just the NASDAQ, right? I know some of you trade Forex, so, I'm bouncing around with charts here. We go to the NASDAQ. Today, we actually just gapped up into an outside the range supply zone. So we color code our supply and demand zones based on probability. The yellow zones are outside the range. The gray zones are inside the range. So even though price turned here, this is not normally a demand zone to buy at, okay? In fact, inside our sessions, I mentioned to our members that this is not a zone to buy at. This is definitely some, according to our rules, there's likely to be some buy orders, unfilled buy orders sitting here. But so even though price turned here, went up to here, it doesn't mean that's necessarily a trading opportunity. Lower probability, small profit zone. But the point here is the 376 is an outside the range zone. So that takes me back to, let's go back here for a second. So here's that S&P outside the range demand. S&P what was an outside the range supply zone and worked well was then finally taken out, and now the stock market is up to the NASDAQ outside the range supply zone. And what we've seen in between there is just a lot of this. Okay? You know, even if the market does turn lower from here, the stock market that is, okay, and we've been saying this all year and doing this all year. There's plenty of demand zones below. So I know there's constantly articles and stories about an impending market crash and all that, but the entire year we've just been rally with demand zone, rally with demand zone. We haven't hit really any significant supply zones. We hit some outside the range supply zones this morning, but the profit zone to the downside is not huge. Now, what do we notice here? Okay. Notice the range. This right here, this is the NASDAQ at the moment, right? So when you look at this right here is this. So the demand zone, again, here in the NASDAQ anyway, 14,764, that's sitting below this area. Okay. Yeah, that S&P is. Okay, let's keep going. So are we all on the same page? And again, look, I know this is, we've been in this webinar for 30 minutes, and no one is expected to be an expert at this. The point of this is to, hopefully open your minds to how the markets really work, how and why prices turn and move in markets, and then how we start to apply that to all of these different markets, right? So don't feel like you have to, become an expert in this 45-minute webinar. Looking at this, so one thing we never use and never have used are indicators and oscillators. I know some people use that stuff, but remember, you have to be careful, because the reason why we don't use it is because any indicator or oscillator, moving averages, all those different things, I see the questions in the chat, they're all derivatives of price, meaning they're only going to do what price has already done. In other words, they all lag price to a certain degree. So we have to be careful. Like, in other words, if we look at the S&P that came down to our, there's the 432, that came down to the demand zone, right? When price is at the demand zone, which is where our rules have us buying, right here, the moving averages are all the indicators and oscillators are going to be pointing down, right? So if you're waiting for moving averages to be pointing up before you buy, well, they're not going to be pointing up until price is up here. So they all lag price, which means adding any tools to your decision-making process that lag price increase risk and decrease reward. Does that make sense? Yeah, and the reason, like when I developed the supply demand strategy many years ago, I created the zone, right? Because at the time, all I saw was out there was just that basic technical analysis, support resistance, which is always one line, and you're connecting very tested areas, right? So I thought to myself, okay, I understand how all this works. because I'm on the trading floor here. I see the buy and sell orders and all that. It's all about supply and demand, right? But when I saw this, technical analysis, support resistance, one line, I thought to myself, well, that seems unrealistic. Who can pick one point on a chart and say price is going to turn right there and be correct with a high degree of accuracy? At least that's what I thought. And then when I saw where those lines were, they made even less sense. So I decided to create a zone so that it can buy at the proximal price of demand, put our protective sell stop below the area, right, in case we're wrong, to ensure a small loss, and then our profit target before the opposing supply zone. Does that make sense? The zone was created to, give ourselves a good chance in the trade. That's all. 'Cause sometimes people ask that too. Okay. Oh, by the way, we can pull up I can go to any market you want here. So if someone has a market they really want to take a look at, and again, it doesn't matter what market, the supply demand strategy, we apply the rules to every market exactly the same. Nothing changes. Nothing changes at all. Okay. The DAX. Yes, we can take a look at the DAX. No problem. So the DAX, it's really all about the 120-minute chart here. Let's go take a look. This is we actually went over this one with our members this morning. So the DAX is getting stuck up here a little bit, but that's not a supply zone. So if we look below current price, we have the 16,035 demand zone. And then above current price, not outside the range, right? You could see there's the range. So, but as far as the range goes, at least it's in the higher part of the range, the upper part of the range. Does that make sense? Now, when we talk about ranges, we talk about low probability areas. So let's just say, say, okay, right here, this is our big range, right? We have our range here. What we want to do is focus on like that 80 to 90% of that trading volume, trading activity. Meaning, and I'm just doing this, just eyeballing it, so I'm sure I'm not going to be perfectly accurate, but let's take for example, in this whole range, if we take like that area, and again, I'm just guessing here, but I'm using my eyes. Would we all agree that probably 80% of the trading activity in this whole picture is inside this gray area? And it's probably closer to 90% of the trading activity, right? Dejan, we don't use confirmation entries. We use limit orders at the qualified supply demand zones. You see my point? Okay. And again, we have rules around all this, but now you can see that these two demand zones are inside the range. So they're going to be lower probability. Your trading plan may say, and a lot of our members' trading plans say, no supplier demand zones inside the range. Wait for opportunities outside the range, and that's totally fine. Okay. Now, this supply zone is sitting well outside the range, not outside the range, but near the top of the range. Okay. So anyway, there's that with the DAX. Yes, we can take a look at any of these markets. So I can go to crude here. Now, oil has gone from, actually, you know what? The most updated chart on energy is going to be this one right here. And I believe, yeah, let's first look at the oil futures chart is not updated, but we can update it together. But let's go to XLE. This is the energy sector ETF. So for here, the current demand zone that we're focused on is right here. Notice is inside the range a little bit, so not high probability. Here we have a couple outside the range demand zones. But anyway, so the 81.45, structure-wise, it's great. It also has a gap with it. And then the tested supply zone above here, and then the 90.80 fresh supply zone up there. Also in XLE, we have a much larger time frame supply zone sitting just above. So energy's been on the move. Looks like there's still a little room for it to go higher if it wants to. Let's go up to, I'm just looking back in the chat, just some markets to take a quick look at. So we have focused on two charts here recently in gold. And if you're one of our members and in these sessions, we went over this quite a bit the last few days, but so we've had the rally from the 1920 demand zone, which just brought price up to the 19, this is like the 1960 supply zone. Someone tell me though, is this a high probability supply zone? Is this a high probability supply zone? No. Now, in the absence of any new news that's going to bring in a new batch of, lots of buy orders and all that, if you don't have that, the zone is probably okay. But if anything happens that changes the supply-demand equation here and brings in a lot of new buyers, this zone is not likely to have enough supply in it to withstand that. Why? Look to the left. Okay, it's inside this. Right? Okay. So there's that. Okay. And again, we can let's go up here for a minute. Let's go to the dollar. One of the most important, probably the most important chart we can look at, right? It impacts so many other markets. So the dollar is nearing an outside the range demand zone. And that will be best seen right here on the daily chart. Now, kind of have it right here at 99.70. It's actually a little bit lower. It's more like 99.50. So when you see that number there, don't just focus on 99.50, not 99.80. Anyway, it's a little bit lower. I know the dollar's been kind of in a free fall lately, but we are reaching an outside the range demand zone here where it is tested, by the way. We have been back there once and twice, but price barely touched the zone and turned higher. So we are coming back to that. Still have a little ways to go, so it's got to fall. That was got to fall another 50 cents. We also, as of the last couple days, have some new inside the range supply zones starting at 101.40. And again, because they're inside the range, it helps that we have two on top of each other. It helps that structure-wise, these are really good, especially, well, they're both really good. Okay. And it helps that the profit zone is, from 101.40 down to that 99.50, right? So it helps to have a decent profit zone there. Now, we can't expect these to have the same probability that these supply zones had, right? Okay. And I know it's only July, but anybody remember the probably the most important dollar zone we came into this year? Might have been in December of last year. I'm not remember. Anybody remember? We went over it a lot in the FXStreet sessions. It's probably the most important zone we went over in any market. And it's in the dollar, and it's from earlier this year. It was a big one. I don't know if any of you were in those sessions back then. I'm not even sure what chart it's on, but let's see. It was the 115. Remember the 115 supply zone up here? I don't remember what time frame we had it on, but anyway, that was a big one. So the 99.50, Remember that, Tony? Yeah, that was a big one. That was pretty much the stock market bottom. And anyway, we also have we looked at that one. All right. So again, just want to make sure let's go over here. So I want to make sure we're clear on, the two main things we've talked about so far is, this whole concept of supply, demand, fair value. You also call this the novice space, the middle, whatever you want to call it. What that looks like, how and why price moves, what that looks like on a price chart, and then we spent some time on, in the live charts, focusing on, really what that looks like on a price chart. I know we're running out of time, so, if anyone wants more information on that, you can always, I just put the link in the chat again. You can always come to one of these complimentary workshops where obviously we take this stuff deeper. And we'll have more FXStreet sessions to go over all of this. The Aussie, we do have, I think there's time left to go over the Aussie. Let's go take a look. So the Aussie dollar, we go to, trying to remember what chart it is here. No, it's not on that one. I know we had a supply zone in the area. Let me see here. What is a supply zone? Was it on the 30-minute chart? Maybe it wasn't on the 30-minute chart. Well, anyway, let's focus on the demand side real quick. So we do have the 6809 demand zone here. Let's just put a horizontal line here and let's go left. I want to look above that. So I thought we had, there it is. Oh, it's right there. Okay, we don't even need the black line. Okay, so we're getting pretty close to the tested 69.15 supply. Now we use the rule of 50%. Okay, so meaning if price has gone 50% or greater into the zone, we don't expect it, or we won't take the trade again. Again, it wouldn't be surprised if this zone worked out again, but because price has gone more than halfway into it, that means that a lot of the sell orders that make up this supply zone are already filled. The one above already has a little pullback as well, but doesn't look as deep as this. So we do have those two areas on top of each other. And remember, the profit zone from there is down to the 6809. Okay. All right. On that note, great to be with everybody. Great to see you again. I know we haven't had one of these in a while. If you have any questions, you can, you can come to one of those sessions, or I'm sure we have some more FXStreet sessions coming up. And we'll see you. Hopefully that was helpful. We'll see you next time.